Rather than stocks and bonds, publicly traded real estate investment trusts own commercial, residential, or industrial property or mortgage securities. They distribute rental income, earnings from the sale of properties, and payments received on mortgage-backed securities loans to investors. REITs can generate financial gains, but the major draw is usually the regular dividend income. They avoid corporate taxation by redistributing at least 90% of profits to shareholders. The simplest approach to use real estate to fund retirement is to use equity in a property that is fully or partially paid for. Downsizing is selling your present property and using the proceeds to purchase a less expensive one. Moving could also save you money on property taxes, upkeep, and utilities. Gains on a home sale are tax-free up to $500,000 for a married couple filing a joint return. In recent years, a number of companies have begun to offer investors the opportunity to purchase shares in specific real estate ventures, such as flipping individual homes or renovating commercial space, through crowdfunding platforms such as Ground Floor, which requires a minimum investment of $10, or Realty Shares, which requires a minimum investment of $5,000, depending on the project. The investor can choose from a list of approved properties on the investment firm's website, with predicted income and capital gains disclosed but not guaranteed. It's a different option than looking for an investment property on your own.